just there. That's at 73s. Now, by watching what happens on a ladder, you get a real good clue to levels that you perhaps wouldn't know. Now, you're going to really struggle on a move up, this is a 1 minute chart by the way, to pick 73 as a level out of this. You know, what's at 73 there to suggest that that's a level any more than anywhere else in this move. But when we come back, where do the lows establish? All at 73. This is because there was an attempt to sell that, and I'll show you this on a ladder in a moment. An attempt to sell it, as soon as it got through that selling, the absorption at 73, the market then pushed on and kept the move going up to the next zone of absorption. What we'll have a look at is the beginning of the move down here through 73s, the absorption and where the opportunities were in that, how to look at that, how to try and play that as well. So let's get the ladder up and you'll see what I'm talking about. Right. Now, what I have got is I've got this played at double speed, otherwise we'd be watching it for 20 minutes and no one wants to be doing that. So double speed, we're trading up towards the 73s now. You can see the time down here at the bottom. So pushing on, and here you start to see the absorption at 73. Watch what trades here. Loads and loads, it cannot push up, nothing's trading into 74. As soon as it trades 74s, effectively, whoever was selling it there is done. They sell, in that little phase just then, someone managed to get away 2,200 lots at that price. And you see the market doesn't come back at all. The buying then continues. What's happened is anyone who was selling it there is starting to get run over. Now, don't get me wrong here, if you've sold 2,000 lots, you're not getting out of this for a 5 or 6 tick loser. The reason that someone's selling, who knows? Possibly they're getting out of a long and they're using the liquidity to get themselves out. Possibly they want a large short position and they're willing to keep accumulating, and so they're quite happy to sell 2,000 here, they'll sell another 2,000 higher up. So now we're getting up to the next area. This is where we've now got up to this little circle here. This is where you get lots and lots of absorption. The way the absorption shows itself up, watch these 85s, 86s. Every time it trades 86, even if the market goes bid 86, sells straight back to it. There we go, bid 86, offered. Starts coming back off a little bit. So there's definitely some buying in this. You know, the market is willing to buy at these prices, but every time it gets up there, the offers come back. Every time it trades into one of those offers, the offer comes straight back. So this is now where you need to start building yourself up a picture or start almost planning a trade. There's no rush here. If someone's absorbing this, they're going to absorb this for some time, or that's potentially what's going to happen. But the first thing to be thinking, right, someone's absorbing 85, 86s. Market goes through here, we're going to get the same as we got from down here, and you're going to get a continuation up. Next level is 95, 96 area. So that's what you could be starting to plan. If we start getting a bid 87 and trading into 88, you can go long. At the moment though, market is stuck. It's a difficult one here to decide which way we're going to go. So what you're looking for is a clue to this. Now what I mean by a clue is a sense that either no one's buying it, and what you're looking for is the relative difference in buying and selling. So what you want to do, what you want to see is the slowing down in buying into 86s. So you get less and less people willing to buy 86s and more selling into 85s. That's the clue that perhaps you're starting to come off. Likewise, if you don't get any selling into 85 and it's all buying 86s and then it's able to get a bid at 86, so a bid in this box, that's then where you're getting a sense that the markets start coming off. So at the moment, if anything, we're starting perhaps to switch just towards selling. Just said every time up to 86s offered. See, there we go, back through 85s now. And what we've established here, quite a small little range. It's in the middle of this circle here. But you've established a range basically between 82s and 86s. So until you get out of that range, this market could go either way. So if you're long in that range, you're probably as likely for a winner as you are if you're short. Once it gets out of the range, that's where you get a clue to the movement. Because everyone long in the range looking for a move up comes out if we drop below 82. Everyone short in the range looking for a reversal gets out above 86. So there's a clear willingness to absorb here, but when was the last time we traded 86? It's not gone back up there. Since we've got an offer at 87, it's not going back to 86s. So you could now start looking at this thinking, right, well, I can have a go at selling 84s, 85s because it won't trade back to 86s now. This is showing you that the sellers have taken over. The sellers are willing to sell at lower prices. When we first got up there, they could sell 86s and they had no problem getting them. Now, they're not getting 86, so they have to sell 85. If the buying slows down at 85, which it is kind of there, see there, straight back 85, 100. There's no willingness to keep buying when we get through 85. There we go, another 100 trades at 85 and the offer comes back. Now, if sellers can't get 85s, they're going to have to sell into 84, 83, 82. Because they can't get the prices that they want. It's all about watching this relative change between which prices it's trading. Right here, we were trading 85, 86. We're now trading 85, 84. And all the time, that the amount of buying into the offer was slowing down. So now you're short 85s. What you'd be looking for if you're short 85s now is a move through 82. Get through 82, you can then start looking back down to where we've already got these bids, because that was the point that we then got that little acceleration up above 73s. So that could be your area to look for. So somewhere around about 74, 75, as we've got the bids, that would be a target on this short. So what we're looking at now is we've had an absorption and we're starting to move away. So sellers have won this, at least for the moment. What you've got to be looking for now is through 82s, does the selling keep coming as we drop? As you can see from the chart, obviously it doesn't. So let's have a look what clues give us that. So you've got down 78, the selling keeps coming. 77s though, very quickly, large bid at 77, and then we skip up. So can we now get back down to 78? No, the bids come back. Every time it sells, the bid comes back. And again, another 60, 70, 80. So what's happened there is as we've come off, people have used this as an opportunity to get long. They tried to buy it down at 78s, didn't get it, so they then started to buy it higher up and it gets it back into that range. Now when you're back into the range, think about this from the point of view of if you'd sold this, what would you be thinking now when it gets back up here? You'd be thinking, I didn't get paid on that sale. I'm not so sure that I want it anymore. But there's protection from the previous absorption, so you want that to save you. But very quickly we get a bid at 86s. 85 now keeps reloading, so what's happened now is that selling isn't winning as it did before. Steps above 86. Can we get any selling into 86s? Yes, a little bit. So he goes quick flick down through 86, straight back up. And now we're not getting the selling. So this is where that absorption then fails effectively. It tried to sell, didn't come off that final time, and then starts to go up once more. But in terms of a pattern, this is quite a nice little pattern to give you that break. What you need a market to do is clear out some of those positions. What I mean by that is what you have up here between 82 and 86 is building up of longs and shorts. Once the market comes off, that gets out some of those longs. Now, if it doesn't keep falling, as it comes back, the longs then start to get back in. Shorts who held and are now back to a scratch are going to be less comfortable on that trade. And unless the selling keeps coming at 85, 86, the shorts will come out of it because their protection's gone. The reason for the short has gone if that selling disappears at 85, 86. So they then turn to become buyers. So you've now got buyers who are trying to get back in long after getting stopped out, added to shorts who now not got paid and need to get out of their trade as well. All buy through those 85, 86s, and that's why you get the continuation move up. Like I said before, this area where you got all that selling, that was where someone was willing to sell and the buyers kept buying through them. What you can take from that is there was a clear willingness to buy at 73. So on a move back, you should be able to assume that that willingness to buy at 73 will remain. And it does. The first time, when we fail at the high this time, you get a reaction, but that's not the one to take. Reason being, similar to what we saw here, the buyers who buy down here at 73 this time don't get paid, they don't get the continuation. So anyone who's long here when it gets back down here, they're not likely to buy again, they're more likely to stop out if it goes through, and that's what helps create this move lower. So I hope that's given you a little sense of how this volume ledge got created. Let me just click it back. How this volume ledge got created, because at the time when we got up here, that's what the profile looked like. That's a classic, this isn't a high situation on a profile. The highs should be created where volume tapers off, as it does on the final move up, as it does on this move. That creates a high. You don't get many highs that end like that, because what that's showing you is that the market has been stopped from finding the last buyer. People are still willing to buy it there, that's why you get that volume ledge. So it needs to go through to find out where the buying runs out. We find out it runs out at 96s and then the market can fall. But it all pivots around this area. Once you get back below it, then the fall starts once more. So pay great attention to these areas of absorption. That's what gives you reference points. That's what allows you to pick that as a level where anyone looking purely at a chart is not going to see that at all.